Alrighty. What is going on, guys? Welcome to Stock Talk with Nico Criticos. Today, we're going to be doing some stock analysis on Pool Corporation. I have made videos on this a while back, but I need to do an update on this because there's some pretty interesting news coming out. I just bought more shares of this because I am a shareholder and I am bullish on this stock. I think it has a really nice moat. And although the stock has been suffering for a while now, it's actually been, you could say 2022, it crashed with the rest of the market. And then between 2022 to last year, it was pretty much flat. It was pretty much at $340, pretty much that entire period. Then, since last year to now, it's been crashing as well. It's down 42% in the last year. So as you can see, I got 20 shares here at $215 a share. And the first thing I want to bring up is if we come down here, we could see what have insiders been doing. And as you can see in April, it looked like there was definitely shares being bought and sold, which we could go all, let's see, let's go all the way, let's go back to April. April, it was still in the 200s. And then in May, as of the last 2 weeks or so, it's come below $200 a share. So if we go back to April, you could see there was an informative sell here on March 26th, and then April there was some selling, uninformative buys, which uninformative buys, that doesn't mean as much because it's uninformative. But if they're buying it on the open market like this, these are the important ones. We have the director buying almost $200,000 worth 4 days ago. We have another director buying $90,000 worth, and then another director buying $1.9 million worth. So that would have been May 8th at the price of, let's see here, May 8th, it was $187. And now it's $182. So it's even cheaper. And that's, if it's like one person, sometimes, it doesn't really mean as much. But now there's three different people, with one of them being over a $1.9 million investment. When you have three different people within the company buying shares, I think that's a very bullish sign, very bullish. And like I said, it's informative buys, shares bought on the open market. It is not an award they got or some sort of package, payment package. It's not like that. I don't think sometimes when you're an insider, you get discounts on the share price, but if they're buying it on the open market, I would guess they're getting it at the same market rate. But even if they got the discount, I think it's like 10%, I want to say, which would mean if they bought it at, let's say, 190 a share, then maybe they're actually getting it at in the 170s. Anyways, the point is the stock is at a 5-year low. And if you don't know what Pool Corporation does, this is probably the most important company in the pool space. This is a $6.6 billion company, PE of only 17, which we're going to look at the history of the PE ratio in a second. A dividend yield of 2.7%, which is also very nice. And they were founded in 1980. So I believe I have not done analysis on this company in probably a couple months, but based off of what I remember, I want to say the maintenance aspect of their business makes up 60% of revenue, and then 40% is made up of new pool installations. I want to say that's the mix, but they have different forms of revenue basically. And with the last couple years, I think we've definitely seen inflation problems. You keep hearing about this K-shaped economy recovery where the rich are getting richer, the poor are getting poorer, and that's not really going to help. I mean, that could definitely hurt their business. So, with better economic times, this company is going to benefit. But if we look at last year, net sales of $5.3 billion. We also will confirm this on Qualtrim. As you can see, sales peaked in 2022. If you've been investing for a while, you know that around the pandemic time is when pool installations and all these different home renovation projects really were peaking around that time. And so for them, it looked like 2022 was their peak. And then since then, it's pretty much been flat. But let's go back to this. Gross margin of 29%. Company guidance for this year was about $11 of EPS. Okay, does that match up with Yahoo? Yes, that's on a normalized basis. Same with GAAP. That makes things a lot easier. So $11, GAAP or non-GAAP, $11 EPS. That makes it way simpler. So I mean, let's see. I don't know what's 180 divided by 11. So if you buy it now at 180, the company does about $11 EPS. You're paying 16 times earnings. Okay, so somewhere around that. And what else do we have here? Current market commentary shows mixed analysts. Wow, average price target of 256. We're at 182. There's definitely some money to be made there. So, this is why I'm bullish. Pool is the largest wholesale distributor of swimming pool supplies, benefiting from a national distribution network and many local sales centers that provide convenient service and inventory depth, strong scale advantage. Private label and supplier. Private label products and exclusive supplier relationships give pricing and margin advantages versus small independents. Sizable portion of sales is aftermarket and maintenance, which I think is, again, I want to say it's 60%. I forgot. More stable and less cyclical than new pool construction. So, and the way I kind of look at that is like, okay, if 60% of their business is that, that means this is mostly maintenance thing, mostly maintenance revenue, keeping this revenue flat. Then when new pool installations spike, well, then we're going to see that sales growth. And same thing with, I mean, net income has really gotten beaten down. So we're going to see net income spike. Free cash flow is, again, we should see that pop too. The cash to debt on this company is not good. This is something I don't like. Only 60 million in cash and over a billion in debt. That's not very good. But again, we have this nice moat that they have. Investments in B2B e-commerce and regular tuck-ins expand reach and raise barriers to entry. Okay, blah, blah, blah. Base case uses analyst revenue growth of 3.5%, EPS growth of 7.5%. Does that align with Yahoo? We have, 3. So they're only growing revenue about 3%. Right now, EPS is supposed to go from 11 to 12. That's still, okay, that's roughly whatever, 7% or whatever. Gross margin baseline, assume modest improvement. Okay, no large buybacks beyond normal. Base case is that EPS around $11, $13 by 2028. That's what it's looking like too. So they are growing. Which actually, if net income has been going down, that means they have to be buying back shares, I would guess, right? Isn't that the only way you could fix EPS? They're buying back 3% of shares. So that's why EPS is going up. Then, okay, this is conservative case. They're calling it around $180 average. Let's say they're calling 180 bucks, and this is for if you want to be conservative, which is where we're at right now. Upside case, we're looking at about $300 a share. Okay, possibly more. So, and that'd be a 2x on your money. Now, key drivers to watch: housing and remodeling cycle, strong positive correlation to pool sales, maintenance versus. I mean, think about it. I mean, they are the number one. They are the number one pool company, right? So you really just, the only question to ask yourself is: are you bullish on pools? Or are you not bullish on pools? I mean, if unless you thought that pools were just a fad, part of the past, and people aren't going to install pools anymore. If you believe that, then don't buy the stock. But I don't think that's realistic at all. I don't see pools being just this fad that happened in the past and people are just going to stop installing pools. I don't think that's realistic. Maintenance versus new build. Okay, blah, blah. We already talked about that. Input costs and tariff swings. Everybody's struggling with that right now. The valuation, the risks. Okay, so let's go on to our next chart here. I love looking at, so we already know, obviously, profitability, return on capital, those margins and stuff, they're not going to be good right now. Okay, they're down. Their margin's only 5%. On a good year, though, when things get back to normal, don't be surprised if we're looking at 15% margins. Then we definitely need to come check this because this is what makes me extra bullish. Here's the last 5 years of this stock. 5 years ago, again, at peak, we're looking at PE of 41. At the worst case scenario, 4 years ago, we're looking at a PE of 17. Or I'm sorry, 15. Now we're at 16. Okay, so pretty much at the 5-year low. Free cash flow yield. At the peak, people were only getting a 1.5% of free cash flow yield. Now, you're getting 9%. Not many stocks give you that. Price to sales, same thing. People were paying 4.5 times sales. Now you're paying 1. So we're looking at a dirt cheap valuation. Again, I'm not saying that it's not for a good reason because technically it is for a good reason. Their numbers are bad. Look at that net income. Net income has gone from almost $800 million to $400. So it's almost been cut in half in the last 4 years. But will that go back to where it was? I think so. I am very bullish on this. I think they have a very nice moat. And like I said, 3 insiders purchased shares above this price. So that is my analysis for Pool Corporation. Let me know what you guys think down below, and I will see you in the next video.